What's up, guys? You're watching Forward Tech with Akhan, and on this channel, we talk about technology that's shaping our future today. In this episode, I put together a supercut of everything Elon Musk said during the Q4 2022 earnings call. Now, these quarterly calls come in the form of an audio webcast, so there's not going to be a lot to visually watch in this video, and if you just wanted to listen to it, you can actually follow me on Spotify by searching for Forward Tech with Akhan. The link is in the description. And while you're at it, go ahead and like this video and subscribe so you're updated when my recap of the earnings call comes out. Without further ado, let's jump right into the Q4 2022 earnings call.
So, just going through a 22 recap. It was a fantastic year for Tesla. It was our best year ever on every level. The team did an amazing job. It's an honor, of course, to work with such an incredibly talented group of people. So in 2022, we delivered over 1.3 million cars and achieved a 17% operating margin, the highest among any volume car maker. I think maybe among any car maker. While doing so, we generated $12.5 billion in net income and $7.5 billion in free cash flow. Importantly, the Tesla team achieved these records despite the fact that 2022 was an incredibly challenging year due to forced shutdowns, very high interest rates, and many delivery challenges. So it's worth noting that all these records were in the face of massive difficulties. A credit to the team for achieving that. The most common question we've been getting from investors is about demand. Thus far, so I want to put that concern to rest. Thus far in January, we've seen the strongest orders year to date than ever in our history. We currently are seeing orders at almost twice the rate of production. So I mean that's hard to say whether that will continue at twice the rate of production, but the orders are high, and we've actually raised the Model Y price a little bit in response to that. So we think demand will be good despite probably a contraction in the automotive market as a whole. Basically, price really matters. I think there's just a vast number of people that want to buy a Tesla car, but can't afford it, and so these price changes really make a difference for the average consumer. It's sometimes for people who are have a lot of money, they sort of forget about how important affordability is. And it's always been our goal at Tesla to make cars that are affordable to as many people as possible. So I'm glad that we're able to do so. So I think it's a good thing, all things considered. We're also making very good progress on cost control, and we're seeing the costs of production in Berlin and Austin drop commensurate with the growth in production, so as you'd expect. So, with respect to Autopilot, as of now, we deployed full self-driving beta for city streets to roughly 400,000 customers in North America. This is a huge milestone for autonomy, as FSD beta is the only way any consumer can actually test the latest AI-powered autonomy. And we're currently at about 100 million miles of FSD outside of highways. And our published data shows that improvement in safety statistics is very clear. We would not have released the FSD beta if the safety statistics were not excellent. Regarding batteries, production rate of 4680 cells reached 1,000 cars a week at the end of last year, and we're increasing capacity for 4680 cells by another 100 gigawatt hours, as announced at Giga Nevada yesterday. Our long-term goal is to get to well in excess of 1,000 gigawatt hours of cells produced internally, and continue to use other cell providers. So to be clear, we will continue to use other cell providers, just that the demand for lithium-ion batteries is quasi-infinite and will be for quite some time. So we feel we can scale a lot faster using both suppliers and internally produced cells. And we've got an amazing plan for making the 4680 cell low cost and high energy density. So energy storage also saw record growth, and that is continuing to accelerate. It's always worth remembering that the three pillars of a sustainable energy future are obviously electric vehicles, solar and wind, and then the third key item is stationary storage to store the energy from solar and wind, because obviously the sun doesn't shine all the time and the wind doesn't blow all the time. So if you have those three things, you can convert all of Earth to a fully sustainable situation, many times over, actually. So I would like to just make it clear that there is a path to a fully sustainable future for humanity, and our goal at Tesla is to accelerate progress on that path as much as humanly possible. So so we're obviously ramping up megapack production, and we expect it to grow at a rate quite a bit faster than our vehicle output. So in conclusion, we're taking a view that we want to keep making and selling as many cars as we can. We believe we can keep pushing for strong volume growth while retaining the industry's best operating margins. As we mentioned many times before, we want to be the best manufacturer. But really, manufacturing technology will be our most important long-term strength. So, and we'll talk more about our upcoming plans at the March 1st Investor Day. And lastly, I want to once again thank all of our employees for delivering another record-breaking year. Congratulations, guys.
Let's now go to investor questions. Will Tesla be able to take full advantage of advanced manufacturing production credits for battery cells packs? So $3,700 per long-range Model 3 and Model Y. It's $45 a kilowatt hour. For autos and energy products, and how much does Tesla expect to earn in the coming year from these credits?
I'll say a little bit about it, then I think Zach will add some. Long term, we expect the value of these credits to be very significant. You can do the math. If we were to get anywhere near 1,000 gigawatt hours a year of production, or even a few hundred gigawatt hours, it's very significant. So, but the credits do rely upon domestic manufacturing, and in the case of Panasonic with domestic manufacturing, we're splitting the value of the credits. So the value of the credits this year will not be gigantic, but I think it could be gigantic in the future. We think it probably will be very significant in the future.
Thank you very much. The next question from investors is, after recent price cuts, analysts released expectations that Tesla automotive gross margin excluding leasing and credits will drop below 20%, an average selling price around $47,000 across all models. Where do you see average selling price and gross margins after the price cuts?
Yes, something that I think some of the smart retail investors understand, but I think a lot of others maybe don't, is that every time we sell a car, it has the ability just from uploading software to have full self-driving enabled, and the full self-driving is obviously getting better very rapidly. So that's actually a tremendous upside potential, because all of those cars with a few exceptions. I mean, only a small percentage of cars don't have hardware 3. So that means that there's millions of cars where full self-driving can be sold at essentially 100% gross margin. And the value of FSD grows as the autonomous capability grows, and then when it becomes fully autonomous, that is a value increase in the fleet that might be the biggest asset value increase of anything in history. Yeah.
Thank you. Let's go to the next investor question. Since Elon started political influencing, polls from Morning Consult and YouGov show Tesla brand
YouGov. You can crush them with your life.
Show Tesla brand favorability declining in 2022 and division among partisan lines. Such brand damage can impact demand. Does Tesla track favorability, and how will any brand damage be mitigated?
Well, let me check my Twitter account. Okay, so I've got 127 million followers. It continues to grow very rapidly. That suggests that I'm, reasonably popular. It might not be popular with some people, but for the vast majority of people, my follow count speaks for itself. I'm the most interactive account, social media account, I think, maybe in the world, certainly on Twitter. And that actually predated the Twitter acquisition. So I think Twitter is actually an incredibly powerful tool for driving demand for Tesla. And I would really encourage companies out there of all kinds, automotive or otherwise, to make more use of Twitter and to use their Twitter accounts in ways that are interesting and informative, entertaining, and it will help them drive sales, just as it has with Tesla. So the net value of Twitter, apart from a few people are complaining, is gigantic, obviously.
Thank you. Next investor question is, Elon said previously that FSD hardware 4 will most likely come first in Cybertruck. Is that still the current plan? Do you expect there to be an upgrade path for hardware 3 cars to hardware 4?
Yeah, Cybertruck will have hardware 4, and typically, for 2023, Cybertruck will not be, a significant contributor to the bottom line, but it will be in next year. So it's an incredible product. I can't wait to drive it personally. It will be the car that I drive every day. Actually, I'm wearing the T-shirt with the smashed glass, it's just one of those products that only comes along once in a while, and it's really special. So, yeah. So, with respect to upgrading cars that have hardware 3, I don't think that will be needed. Hardware 3 will not be as good as hardware 4, but I'm confident that hardware 3 will still far exceed the safety of the average human. So what we're aiming for is well, how do we get ultimately to, let's say for argument's sake, if hardware 3 can be, say, 200 or 300% safer than human, hardware 4 might be, 500 or 600%. There will be a hardware 5 beyond that. But what really matters is are we improving the average safety on the road? But it is the cost and difficulty of retrofitting hardware 3 with hardware 4 is quite significant. So it would not be, I think, economically feasible to do so.
When do you think Tesla insurance will become big enough revenue source to warrant providing more details in the financials of the business so investors can compare it to other insurance companies?
Yeah, and so there are two really important side benefits for Tesla insurance that are worth mentioning, one of which Zach alluded to, which is that just by Tesla offering insurance for our cars at a competitive rate, that that makes the other car insurance companies offer better rates for Teslas. So it has a bigger effect than you'd think because it improves total cost of ownership or insurance costs even when they don't use Tesla insurance, because now the Geicos of the world have to compete with Tesla and cannot charge outrageous insurance for Teslas. This is great. So it has an amplified effect, very important. Then it is also giving us a good feedback loop into minimizing the cost of repair of Teslas for all Teslas worldwide. Because we obviously want to minimize the cost of repairing a Tesla if it's in a collision, and for Tesla insurance. And previously, we didn't actually have good insight into that because the other insurance companies would cover the cost, and actually the costs in some cases were unreasonably high. So we've actually adjusted the design of the car and made changes in the software of the car to minimize the cost of repair. Obviously, minimize the best repair is no repair. Avoid the accident entirely, which since every Tesla comes with the most advanced active safety in the world, whether or not you buy full self-driving, you still get the intelligence of full self-driving for active safety, active collision prevention. So it's giving us this really good feedback loop for, again, reducing total cost of ownership, and also just figuring out how to get, if somebody's car is in an accident. Most accidents are actually small. They're like, a broken fender or scratched side of the car or something like that. They're not, that's the vast majority of accidents. But we're actually solving how to get somebody's car repaired very quickly and efficiently and back in their hands. And like I said, those improvements actually apply then to all cars. And like we're making, just to emphasize another key point, because some of these points might be lost, so I apologize for being repetitive, but it's remarkable how small changes in design of the bumper and improving obviously improving the logistics of providing spare parts needed for collision repair have an enormous effect on the repair cost. So if you're waiting for a part to get repaired and that part takes a month, now you've got a month of having to rent another car. It's very extremely expensive, and of course you're missing the car that you love and actually want to drive. So this is actually a very significant effect on total cost of ownership and customer happiness.
Thank you. The next question from investors is Cybertruck production still on track for mid-year?
We do expect production to start, I don't know, maybe sometime this summer. But I always like try to downplay the start of production because the start of production is always very slow. But it increases exponentially, but it's always very slow at first. So I wouldn't put too much stock in start of production. It's kind of when does volume production actually happen, and that's next year.
Thank you.
Yeah, that's right, Elon. Like, just to emphasize on that, we've started installation of all the production equipment here in Giga, Texas. Castings, GA, General Assembly, body shops. We built all our beta vehicles, some more coming still in the next months, but as you said, the ramp will really come 2024.
Yeah, exactly.
Thank you. And the last investor question is, with near infinite global demand for energy storage,
yeah, seriously,
where should Tesla build the next megapack factories? How many are needed on each continent?
It's a good question. It's not something I think we'll provide an update about that in the future, but it's something we're thinking about very carefully. Really kind of like, what is the fastest path to 1,000 gigawatt hours a year of production? You'll see announcements come out later this year and next that answer that question.
Real quick, thanks for watching the video. If you're enjoying it, go ahead and give it a like and subscribe to the channel. That way when my full recap of Tesla's 2022 earnings call comes out, you're going to be notified. And don't forget, if you just want to listen to this episode, you can do so on Spotify by searching for Forward Tech with Akhan. The link is going to be in the description. So thanks again for your support. Let's jump right back into this episode.
Firstly, it sounds like your 1.8 million unit volume indication for this year is somewhat more supply constrained and demand constrained. Then I have a follow-up on cost, but is that an accurate statement?
Well, okay. I mean, our internal production potential is actually closer to 2 million vehicles, but we're saying 1.8 because I don't know. There just always seems to be some friggin' force majeure thing that happens somewhere on Earth, and we don't control if there's like earthquakes, tsunamis, wars, pandemics, etc. So, if it's a smooth year, actually, without some big supply chain interruption or massive problem, we actually have the potential to do 2 million cars this year. We're not committing to that, but I'm just saying that's the potential. So, and I think there would be demand for that too.
Yeah, thanks for clarifying that. And on the cost side, the numbers that we just saw from you, as you pointed out, were weighed down by the 4860 ramp, the Berlin, Austin, gigacastings processes not at rate. Can you give us a bit of an indication of the headwind that you're absorbing from those things like you did last quarter? And then lastly, on cost, do you think that we can tease out an interesting data point from on where battery costs are headed from this announcement that you just made last night? If I'm correct, it looks like the investment cost per kilowatt hour is less than half of what I've seen anywhere else, maybe $30 a kilowatt hour for that capacity.
I don't think we want to say the specific number, but it's interesting if you look at the size of Giga Nevada that is allocated to make 100 gigawatt hours is a small fraction of the size that currently makes about 35. Yeah, and it goes back to the point I was making, and I said this several years ago. I think Tesla's really the competitive strength that will be by far the hardest for other companies to replicate is Tesla being just damn good at manufacturing and having the most advanced manufacturing technology in the world. And if you've got that sort of advanced manufacturing toolbox, you can apply it to many things. And we're applying it now to battery cells. I should also say that we have other products in development. We're not going to announce them, obviously, but they're very exciting. And I think we'll blow people's minds when we reveal them. Tesla has the most exciting product roadmap of any company on Earth by a long shot, and we'll continue to, I think, be in that position. We got more great ideas than we know what to do with here. So the future is very exciting. As I said in the last call, there's going to be bumps along the way, and I think we'll probably have a pretty difficult recession this year. Probably, I hope not, but probably. And so one can't predict the short-term sort of stock value because when there's a recession and people panic in the stock market, then prices of stocks, both value of stocks can drop sometimes to surprisingly low levels. But long term, I am convinced that Tesla will be the most valuable company on Earth.
I'd like to follow up on the data point you just gave on cost. If I look back at the COGS per car, you guys bottomed close to $36,000 in the middle of 2021. And then the number went up as you had to face with inflation in input costs and the ramp of Berlin and Texas. And this quarter, I think we are close to $40K and we peaked maybe close to $42,000 at some point last year. And so my question from here is, how much time do you think it takes you to get back to this kind of 36K, which would mean, Berlin and Texas and like the input cost, all that stuff is normalizing. Is that and that would be like a kind of like a 10% decline in the COGS per car. Is that something we can hope to see this year, or is that too optimistic?
Yeah, and my guess is if there is if the recession is a serious one, and I think it probably will be, but I hope it isn't. Then that would lead to meaningful decreases in almost all of our input costs. So I would expect to see deflation in our input costs most likely, which would then lead to better margins. I'm just guessing here. So this is, but that would be my guess.
Excellent. Thank you so much. So as a quick follow-up, Elon, I was thinking about like FSD, and when you look at like the situation today compared to a year ago, it's like the progress has been like amazing in the quality of the product, but also its rollout. And so I was wondering, how much is this like impacting the take rate of FSD today? So do you already see that people are getting more excited by FSD because they see it around them on 400,000 cars and they see the value of the service already? Or is that too early to really see like to expect like an uptick in the take rate?
The trend is very strong towards use of FSD. And as you allude to, with each incremental improvement, the enthusiasm obviously increases. I think something that still a lot of people out there don't quite appreciate is that Tesla, I've always said like Tesla is as much a software company as a hardware company, but Tesla is really one of the world's leading AI companies. This is kind of a big deal, both AI on the software side and on the hardware side. With the hardware 3 inference computer, still the most efficient inference computer in the world, despite being at this point 5 years old from the design point. And with hardware 4 coming, and then hardware 5 beyond that, where there are significant leaps. The Dojo computer, we expect to be using that operationally at Tesla later this year. We're seeing just a lot of world-class AI talent join the company. There's also the long-term potential of Optimus, where we're able to use our expertise in electric motors and power electronics, batteries, and advanced manufacturing to be able to make a humanoid robot that is actually useful and can be made at high volume with exceptional capabilities because of the autopilot AI that where we take because the car is like a robot on 4 wheels and the Optimus is a robot on legs. But as we get closer and closer to solving real world AI, and we don't see anyone even close to us in achieving this, the value. Pierre, I think you appreciate this, and a few others do, but most don't know what I'm talking about. So, but this is the thing that has order of magnitude potential market cap improvement for Tesla.
Thank you. And the next question comes from Alex Potter from Piper Sandler.
Maybe one additional question here on the incremental capacity in Nevada, the 4680s that you're planning. It's a lot of batteries, obviously, and presumably you won't be putting all of those in Tesla Semi. So I guess 2 questions about that incremental capacity. First, is it correct to assume that all of those 4680s are going to be more or less fungible and usable in your entire range of products? And if the answer is yes, then if you had to guess, how do you think that 100 gigawatt hours would be allocated between your various end markets?
Let's say, like I alluded to, a number of future products. Those future products would use the 4680.
Thank you. And the next question comes from George from Canaccord Research.
Hi, everyone. Thanks for taking my question. So you recently adjusted prices, and that may have put many of your competitors in the back foot. In addition to that, capital markets have recently gotten a lot tougher. So with those factors in mind, I'm curious how you see the current competitive landscape changing over the next few years, and who you see as your chief competitors 5 years from now.
Well, 5 years. 5 years is a long time. I was with the Tesla Autopilot AI team until late last night, and we're just asking. I was just like, so who do we think is close to Tesla for a general solution for self-driving, and we still don't even know really who would even be a distant second. So yeah, it really seems like we're. Right now, I don't think you could see second place with a telescope. So, or at least we can't. That won't last forever. So, in 5 years, I don't know. Probably somebody's figured it out. I don't think it's any of the car companies that we're aware of. But I'm just guessing that someone might figure it out eventually. Yeah, and I don't want to say I think we have a lot of respect for the car companies in China. They are the most competitive in the world. That is our experience, and the Chinese market is the most competitive. They work the hardest and they work the smartest. So a lot of respect for the China car companies that we're competing against. So if I were to guess, it would probably be some company out of China is the most likely, to be second, to Tesla. But we are the Tesla China team is winning in China. And I think we actually are able to attract the best talent in China. So hopefully that continues. So yeah, super fired up about the future, and yeah, well, it's going to be great.
Just as a follow-up, the Inflation Reduction Act has created huge tax incentives for commercial vehicles. You mentioned an incredibly interesting product pipeline. Are there maybe some plans to accelerate commercial vehicle form factors outside of the Tesla Semi to help accelerate EV adoption?
Well, I was basically saying that, yes, but I'm not going to give you details because this is nice try. Yeah, of course. So, we have to always look at what is the limiting factor for new vehicles, because if for the longest time we've been constrained on total cell, lithium-ion production output, and so people say why not bring this other car to market or that other car to market? Well, it doesn't really help if all you're doing is shuffling around the batteries from one car to another. In fact, it hurts because you add complexity, but you don't add incremental volume. So it's sort of pointless. In fact, counterproductive to add model complexity without solving the availability of lithium-ion batteries. So as we get we want a new product introduction to match where the cells are available for that new product to use those cells without cannibalizing the cells of the other cars. That's the actual limiting factor for new models, not anything else really.
Thank you. Let's go to the next question. The next question comes from William Stein from Truist.
Great. Thanks for taking my question. Elon, you started to answer this earlier, but I like to ask this question about the AI elements of your business and ask if you could comment on progress around Dojo and Optimus and your anticipation for the likelihood, for example, for the company to disconnect the GPU cluster in favor of Dojo and to have some market achievement in Optimus.
Yeah, I mean, obviously, since we're still at the early stages, there are big error bars in any predictions. So it's like easy, I think, easy to predict the long term, but hard to predict the time in between now and then. But we think Dojo will be competitive with the NVIDIA H1 at the end of this year, and then hopefully surpass it next year. The key there is like I think what's the energy usage required for a given amount of if you're training a frame of video, how what's the energy cost required to do that training, and we think probably we said this already actually at AI Day 2, so it's not new information, but we do see potential for an order of magnitude improvement relative to GPU, what GPUs can do for Dojo, which is obviously very specialized for AI training. It's hyper specialized for AI training. So wouldn't be great for other things, but it should be extremely good for AI training. So just like if you do an ASIC for something, it's going to be better than a CPU. This is sort of in some ways like a giant ASIC, and we're able to. Since we're operating one of the biggest GPU clusters in the world already, we've got a good sense of how efficient the GPU clusters operate and what Dojo needs to do in order to be competitive. But we think that it does have a fundamental architectural advantage because it's designed not to be the GPU is trying to do many things for many people. They're trying to do graphics, video games. It's doing crypto mining. It's doing a lot of things. Dojo is doing one thing, and that is training. And we're also optimizing the low-level software so that it at a very sort of bare metal level. So it's just insanely good at efficient training. And the intercommunication between the Dojo modules is extremely high. You're not going across an Ethernet cable. So anyway, we see a path to an order of magnitude improvement in the energy efficiency per given unit of training. But we also have to achieve that, and so that when will it be achieved? It's hard to say, but we do see a path to get there. And then also in inference, like once you've got something trained, well, if you want to have a product, that's a consequence of that training, and that product may not be anything to do with cars, then the efficiency of inference is extremely important. And we also have by far the most efficient inference computer with the FSD computer in the car. This has potential for products that aren't even really in automotive.
Thank you. William, do you have a follow-up?
Yeah, it sounds like the 1.8 million units you expect this year is supply, not demand limited supply. It sounds like by the lithium batteries. If you were to become demand limited, can you talk to us about your propensity to use price and and your relatively high industry margins to grow units and share?
Yeah, it's roughly, a cell supply is roughly matched with that. And this is 1.8 million cars. If we get lucky, it could be more. And then the rest would go into stationary storage, the Powerwall and Megapack. True.
Okay, let's have the final question from Adam Jonas.
Hi, Elon. First question is it time for Tesla to significantly expand the captive FinCo? I mean, you only have like $4.5 billion of these receivables. It's basically nothing compared to other big auto companies. Then I have a follow-up.
I think if we see a severe recession this year, which, like I said, hopefully we don't. In severe recessions, cash is king big time because it's in such short supply. So we want to be cautious about using cash for loans and that sort of thing for cars. I feel we're in a very strong position to get through a recession because we really don't have any debt, and we've got over $20 billion of cash, which is great. Actually, the cash is earning a ridiculous return, not a good return. So it's like non-trivial. The interest rate actually means the 20 billion is earning like quite a good amount. And I've made this point on Twitter a few times, and I'm sure a lot of people on this call understand the basic value of a security is a function of the risk-free rate, or we'll see how risk-free it really is, but of the T-bill rate. So if you've got, I think if I recall correctly, the S&P 500 has a long-term rate of return of roughly 6%. And so I think the Fed needs to be very cautious about having a Fed rate that potentially exceeds 6%. If we see deflation, and I think we are seeing deflation, then you would add the deflation number to the in quotes risk-free rate from the Fed, and as that starts to exceed 6%, now you're starting to exceed the long-term return of the S&P 500, and it starts to become questionable as to why not just put your money in T-bills or a savings account essentially instead of in the S&P 500. If the S&P 500 is variable and the bank interest rate is not. This is so basically the Fed is at risk of crushing the value of all equities. This is quite a serious danger.
Thanks, Elon. And just a follow-up. I don't want to steal thunder from March 1st down in Austin, but how close are we to that step change improvement in BOM cost, where you could sell an EV for under 25 or 30,000 bucks and actually generate a profit? That kind of real moving assembly line moment in manufacturing. Again, don't want to steal the thunder, but just if you wanted to kind of wrap up with thoughts there, that'd be helpful.
Oh, man.
Thanks, Elon.
I mean, I'd love to answer. If I were you, I'd probably asking the same question, but we would be jumping the gun on future announcements.
All right, so that is everything Elon Musk said at Tesla's 2022 Q4 earnings call. If you haven't already given this video a like and subscribed, go ahead and do that, so that way you're updated when my full recap of the entire call comes out. Now, be sure to let me know, what are your thoughts on everything Elon had to say during this Q4 earnings call? You can tell me in the comments. Additionally, stay up to date and make sure you follow me on Twitter at Akhan4Tech, or just listen to each episode on Spotify as an audio podcast. Links for both of these are going to be in the description. Now, as Elon said in the beginning of the call, this has been another record quarter and record year for Tesla in every single metric. So could you use up to $200 of free Tesla stock? All you need to do is set up a new Robinhood account by clicking my link in the description. Then just connect your bank to be able to redeem your free stock. And if you like the content, consider supporting the channel on Patreon, where you're going to get early access to all of my videos. It really is going to help me free up time to make more awesome videos for you all. Again, I put links for everything in the description, so make sure you don't miss out. Thanks for watching this episode of Forward Tech with Akhan. Until next time.